Back with closing trades. We've had a packed show today with corporate conversations. So let's keep that going. Joining us now on the show is Mr. D. Ram Reddy, the Managing Director at Balaji Amines, joining us on the show. Good afternoon to you, Mr. Reddy. Talk to us about how Q3 has shaped up for you. What is the growth outlook going ahead? If you could just run us through the broader picture.
Good afternoon. Actually, you see, in spite of this bad conditions like volatility in the market, we have kept the profits margins intact. Even though the top line was about 5-10 crores here and there, same. But bottom line about 3 crores is plus when you compare to the last quarters. And even EBITDA margins are maintained between 19 to 20. And we expect in coming quarters like farm and agro improvement we see. And additionally, this free trade agreement signed between India and Europe, that also we are expecting some positive for our company, because our major exports earlier were more than 70 to 80% were only to Europe. So that gives us some positive news.
Yes, Mr. Reddy, hi, this is Harsh. But yes, I mean, no doubt that you've managed the quarter well, if I can call it that. Double-digit volume growth, is that at all likely in FY26 now that we've got 3 quarters behind us?
Definitely, we feel, because this quarter has shown some improvement. In spite of improvement, because of the earlier 2 quarters we did not do to our expectations, you will see the like flat. But coming quarter, definitely we expect that there should be some improvement. Minimum 8 to 10% growth we should see. And because we have some expansions, that there are long-awaited expansions. One is modification in the acetonitrile plant, and dimethyl ether plant is for the commissioning, and N-methyl morpholine is commissioning in the Balaji Amines. And at subsidiary end, we have one is brownfield, that modifications and some new products coming in like Teta, Tepa and all. And also the greenfield expansion about 750 crores, that is also in the full swing. Maybe by September 26, you will see that good fruits from the subsidiary end also.
Does that happen only in FY27? Do you see more of the traction building up in FY27, or will Q4 already signal that traction building up in Q4 itself? What's the timing of it?
Yes, it will start something in Q4, but definitely the bigger things you will see in the 27.
And how much of that is because of the kind of export tax reductions or export refund rate reductions coming from China? How much of that is contributing to policy measures sitting out of China?
See, what we expect, even I heard that some of the suppliers from China, they were saying that from the 1st April onwards, China is going to reduce their export benefits, whereby they will stop the exports. That is giving us some positive, so that we will have an opportunity to go to the entire world market for those products which they are not in a position to do it.
Could you help us with the volume figure in the quarter gone by?
Can you repeat, please?
Could you help us with the volume figure for the quarter gone by?
Volume is about 24,000 plus metric tons we have done. Total 9 months, it's about 74,000 tons. It's almost same like what we have done in the earlier year. But this quarter, starting from the January to March, we expect little more than what we have done in this 9 months.
Because earlier you had said that 8 to 10% volume growth in the second half of this year is what you're expecting. So are you on line for that? Along with a minimum 15% growth in FY27. Are we on track for that?
Yeah, definitely for FY27, I can say guaranteed, because there's a lot of new things are happening, which will be commencing from the first and second quarter of the 2027. But this year, yes, we can see little more what we have said, but because of some uncertainty in the world market at farm and as well as agro, we did not do exact 10% what I said. But definitely this one quarter what is left, will be positive than these 3 quarters.
See a lift, Mr. Reddy, starting FY27, Q4, as volume starts to see a lift, where do margins start to normalize towards? Direction will be upwards. I'm just trying to understand the extent of the direction, sir.
See, as I said in earlier my meetings, we normally do in these chemicals and specialty chemicals, around 22 should be the EBITDA margins. Because of the certain reasons like volatility and because of tariff and various reasons, we were at presently at least 19 to 20%. But definitely, I will see in 2027 onwards, we should be 22 plus EBITDA margins.
Okay. And also talk to us about news flow from China, where we're seeing China has announced cuts to export tax refund rates for solar and battery related products. Does this amp up your exports to China? What's the impact here?
Actually, these products, they were getting use, that's about 13% of the benefit from their Chinese government. So they were dumping in the elsewhere in the market. Now, because of this cutting of their benefits, they will not be in a position to come to the out of China, whereby the companies like us should get an opportunity like the product called gamma butylloctane will definitely give an opportunity in the world market, including India and other countries. We will be in a position to increase our supply chain, and we should get the margins improved.
With regard to EU, Mr. Reddy, please tell me if my math is wrong. Around 12 to 15% of your top line is exports. Around 50% of that is the Europe contribution. I'm not sure how much is the US contribution, so give us some color on that. And thereafter, just give us a sense as to does the EU opportunity open up substantially for you? What's the differential in pricing like versus other competitors that you're competing against globally?
Definitely for the Europe, definitely we will be getting along with us. Many companies will get this opportunity. What they are talking from the mid or third quarter of the 27, they are talking that the agreement what they have signed free trade. There we will be definitely having the opportunity comparatively what we are doing presently from the China versus India. We will get an opportunity to increase our supplies to the Europe and increase our supply margins also. And as regards US, yes, we are having around 2 to 3%, which were not affected. Actually, they are very essential for the US market, where we are continuously doing in spite of this tariff. There also, we expect that there should be improvement.
Okay, Mr. Reddy, on that note, we'll let you go. Thanks so much for your time today. So, viewers, that was the management of Balaji Amines talking to us about the growth outlook, on course to achieve 15% growth in FY27 and margin guidance around that 22% mark. On that note, we'll slip into a very short break. Be right back with more on the other side, so stay tuned.